Housing bubble 2.0 is about to get a lot bigger in 2020. That and a whole lot more. Hey everybody, JJ. It is Wednesday, June 17th. You're watching Bull to the Bust. Thank you for joining us today. Let's jump right into it. Let's get started here on the housing news. Out of Los Angeles Daily News, home loan applications hit the highest level since 2009. Now remember, 2009 was a good time to buy because you saw the big drop off in home prices starting at the end of 2008 going into 2009. Now home prices have not corrected at all. In fact, home prices are still rising and they're still up about 5% year over year, as we have reported on this channel. So why are applications at the highest level since 2009? It doesn't make any sense, right? Well, welcome to the new economy where everything is manipulated, everything is Fed intervention. The banks have been completely unleashed, and we reported on this for the first time back in March, but I'd like to remind all of our viewers here that the Fed no longer requires the lenders, they do not require the banks to keep any money in reserves. It used to be just a small fraction, 10%, it was 5%, it dropped down to 3% over the decades. That meant that banks could loan out $100,000 by only having $3,000 in deposit when it was 3%. Now it is zero. The banks can lend money unlimited amounts. They do not have to have a fraction of whatever they lend in reserves. It is a zero reserve requirement. That's the biggest news I think to come out in decades, but the corporate media is barely reporting on it. And some of you might have heard this a few times on this channel, but we have a lot of new viewers, and I think some people forget what actually happened. It's so huge, and it's one of the most underreported news stories in the finance world, in the economics world, in my opinion, in many, many years. And again, that started back in March, right about the time of the big virus shutdown. So obviously the Fed did not waste any time. As soon as they saw the shutdown and they realized what the implications would be, they unleashed the banks completely, and that's one of the reasons why you're going to see housing continue to be propped up. And I'm guessing they're going to also, well, I shouldn't say I'm guessing, they've admitted it, they're going to keep rates at zero and possibly go negative. And we're going to talk more about that in a few minutes here, but first let's get back into the housing numbers. Article here out of Redfin, bidding wars climbed in May as the virus intensifies housing shortage. So we talked about this, but what sellers are doing, a lot of home sellers pulled their home off the market for many reasons. Many sellers were very skittish on putting their home on the market, knowing what was happening in the economy with the millions of job losses. And we'll talk more about the unemployment numbers here in a few minutes. Also, other sellers were scared of the sickness of the virus. They didn't want people walking through their homes. So when you combine the housing shortage with less homes on the market, less homes being sold, combine that with the banks being propped up and completely isolated from having to worry about loan losses or making bad loans that are not going to be repaid, you have an increase in demand. And Redfin has indicated that almost half of its offers were bidding wars for Redfin homes in May. And that was up 44% from April. So this economy is completely detached from reality. It's completely manipulated, as we've talked about. Everything is upside down, backwards, and inside out from what it really should be when you look at the unemployment number, for example. And when you look at the real unemployment number, we're just under 34%. That is according to Shadow Stats. That is closer to the real number. And remember, Shadow Stats, they count unemployed individuals that do not fit into the narrow definition of what the government considers as unemployed. So 34% unemployment, way beyond where we were at the financial crisis, as you can see in the chart right here. But yet we're talking about increasing home prices, rising home prices, increasing demand, and bidding wars for homes. It's absolutely insane, but if you've been on this channel, you knew this was going to happen. They're going to keep the economy propped up until at least November. We'll see what happens. The Fed's talking about never-ending intervention, and we're going to talk about a few words out of Jerome Powell here in a couple minutes. Speaking of low rates, how's about mortgage rates? Fannie Mae sees record low mortgage rates through 2021, so it may not even come down after November? We'll have to see. There's a lot of balls up in the air right now. There's a lot of factors, a lot of moving parts. We have the forbearances that may come to an end. They may extend them. We do not know. Trying to predict what the manipulators are going to do is very, very difficult. If it was a free market, if it was an actual capitalist system, we would very easily be able to predict what would happen. We see the unemployment numbers, and that enough would be a forecast to say there's going to be a big downturn in the home prices. But that's not what's happening. It's propped up. We have the forbearances, we have the foreclosure freezes, Fed-backed loans. They will not foreclose on those homes, so people can stop paying their mortgage for who knows how long. It keeps getting pushed back. It keeps getting extended. So again, record low mortgage rates through 2021 according to Fannie Mae. Recent quote here out of Jerome Powell, the Fed chairman. This is Mortgage News Daily. We are not thinking of putting down our tools for a long time. What is a long time? So do you mean to tell me after November, after the next puppet gets selected, or what they call elected, they're going to keep on propping this up forever? What is the time frame? What is the end game? What is their goal? You guys let me know down in comments. As you know, I've been saying for a long time that look out after November, but by the way they're talking, this could keep on going forever. We could go right into hyperinflation without seeing any correction, which in my opinion is very scary, because I've been holding back on buying and investing, waiting for the correction. What if we never see the correction? What do you guys think? Let me know down in comments. Listen to what the Fed's saying. Look at what they're predicting for mortgage rates being low through 2021. There was another recent comment out of the Fed here that we reported on last week, I think, where they said that mortgage rates are going to stay near zero through the end of 2022. It goes on and on and on. Let's take a look at this article right here out of Reuters. The Fed's Powell beats the drum for more government aid to bolster the economy. Is this even an economy anymore? Shouldn't we think of a new name for it? Is this really an economy? Isn't an economy supposed to be supply and demand and business fundamentals? Well, it's no longer that, as we can see. It's all about the Fed. It's a Fed put. And now instead of looking at any fundamentals, we have to figure out what the manipulators have in store. We have to look at what they have planned for this so-called economy. Another quote here, this is the same Reuters article, quote out of Jerome Powell, quote, "We at the Fed need to keep our foot on the gas until we are really sure we are through this. And that's our intention. And I think you may find that there's more for you to do as well." And unquote. And he said that while addressing Congress. He continued, "It would be a concern if Congress were to pull back on the support that it's providing too quickly," unquote. Right, so let's analyze that a little bit. We need to keep our foot on the gas until we are really sure we are through this. How is more Fed intervention and how is blowing the bubble bigger going to get us through this? It's not going to get us through this. It's just going to continue to put us in a more dangerous position. The bigger the bubble gets, the worse the devastation is going to be once they finally take their foot off the gas, as they call it. Right? This is going to be absolutely devastating. It looks to me like this could be the ultimate crash, one that could eclipse the Great Depression. We've already eclipsed the Great Depression as far as the numbers go, but when it comes to the pain and when it comes to the punishment that we're going to be faced with when this thing finally unfolds, it is going to be record-breaking. It's going to be an historic event that we're probably, if we survive this, we're going to be telling our kids, our grandkids, and our great-grandkids about this for many, many decades. More on the topic of low interest rates and propping up this bubble. Article out of bizjournals.com. Bloomberg urges users to get set for negative interest rates. Right? This is common knowledge now. This is kind of the obvious direction that we're headed. And just a couple years ago, most people would have thought that was impossible. You never heard people on the mainstream, on the corporate media, talking about negative interest rates. Now it's all but baked into the cake. Right? So that's why I always say prepare for the worst. Hyperinflation could come here. I've always said that I thought deflation was going to happen first. We did see deflation in a couple areas. in oil prices, for example, gas prices. But now those have started going back up as well, oil and gas both. All right, that we're going to wrap it up right here. This is out of Eyewitness News, abc7.com. Target to boost employee minimum wage to $15 per hour and give frontline workers a $200 bonus. There's some good news. Some of you say I have negative news all the time. There's good news. Target workers are going to make $15 an hour. The problem is if prices keep rising, if they keep inflating this bubble, $15 an hour is going to be far from enough to keep up with the rising prices. And remember, when home prices go higher, so do rents, because more people are forced into renting because they can't afford to buy a home. And that's going to, of course, cause the demand to go up for rentals. The landlords are going to raise their rents. And this is likely to turn into never-ending calls for higher minimum wage. Maybe it's going to be $20, maybe $25 in the next few years. Maybe they'll make it mandatory. Depends on what happens in November. But, of course, we're going to keep an eye on it for you. Simply Insane, again, let me know down in the comments, what do you think about the timing? Is the Fed just going to keep propping this up, keep the bubble inflated straight into hyperinflation, negative interest rates? If that's the case, maybe we should all go out and buy as many homes, as many cars as we can right now, because prices are going to continue to rise into the stratosphere, into infinity. Right? Completely insane times right now, folks. Thanks everybody for watching this report. Come back for more. Smash that like button if you like what we talk about, and see you again here on this channel. Bye for now.